Welcome to Empowered with Elizabeth Naumovski. Many are living paycheck to paycheck and quite frankly are short on cash. Now, we've all heard of check cashing services and Payday and other high interest loans, but what exactly are they? We've seen ads that say get access to your cash without paying hefty bank fees or get $300 cash advance free. The check cashing services, they let someone who gets a business or government check or money order get cash without a bank account for a flat fee plus a percentage of the check's value. Now, a payday loan is a way to borrow up to $1,500 for up to 2 months. Now, it's supposed to be short term, but that's not how they're used. There are also installment loans of up to $100,000 that charge interest at a much higher rate than credit cards charge. Now, how do they all work? There is so much to learn and discuss here. Today, I'm joined by Pat Dunwoody, a financial services consultant, Candies Kotchapaw, founder and executive director of DYLOTT, and Barb Amsden, head of PQbd. Ladies, welcome. So great to see you today.
Good to be here.
Welcome.
Yep. So, Candies, I'm going to begin with you. Let's begin. Can you just tell us why check cashing and high interest payday and installment loans exist?
Yeah, thanks, Elizabeth, for having me. So check cashing and payday loans are somewhat synonymous when it comes to accessing alternatives to traditional financial institutional borrowing. Payday loans, in particular, offer borrowers the opportunity to access cash immediately to cover unexpected expenses like car repairs, top up on rent if your paycheck is short, or other unpredictable things like that. Whereas check cashing, the services provide service users with another method of getting access to funds from a check that does not run the risk of a hold being placed on the funds for a period of time by a traditional financial institution. This service also removes the stereotypes or discrimination that service users may face when they try to use a regular banking institution.
So, sorry, Candice, please continue.
Yeah, I was going to say just the significant considerations for each of these services is that there's proximity that will be considered. So multiple service locations are located within low-income communities where service users can access funds, usually on a short-term basis, where physical traditional lending institutions are few and far between. Also, there's accessibility feature where there's typically less risk of being denied credit, and the eligibility criteria is far less stringent. And then low income and ethnic communities also tend to use multiple services within these institutions, these lending services. So they use it to send money back to their home country. It's kind of like a one-stop shop, right? You can borrow funds right in the location. You can also pay your bills and do other things. And so there's more than one use to accessing those types of services.
So what's the experience that you've seen and that you've heard throughout the community?
I think for the most part, the use of check cashing and payday loans is a form of, I have an urgent need right now and I need to cover it. However, what ends up happening, especially with the economic climate that we have right now, post-COVID and all of these financial challenges, is that people are borrowing to pay off, and they end up being in this brutal cycle of debt and continuous poverty situation. So a lot more people are depending on short-term lending because, again, it's much more difficult to access traditional financial services from regulated financial institutions like banks. And so people really don't feel that they have choices. They don't feel that they can avoid being in a debt crisis that they're in. So they have no alternatives. They have to turn to these lenders.
And so, Candice, just to continue with 30 seconds before we go to break, a lot of people are using these services, to pay their utility bills or even put food on their table. Is that correct?
Absolutely. And again, it's a crunch that people are in, right? You cannot you cannot pay your bills, so you have to find additional sources of income somewhere.
Welcome back to Empowered with Elizabeth Naumovski, where we're discussing ways to get cash and whether they're helpful to consumers or not. Pat, we're looking at check cashing services now. What is the real cost for people?
Well, with every service, there's going to be a range of fees, but the most common and the average fee that check cashing services charge is 3% on the value of the check, plus a small administration fee. So to give you the example of a paycheck cashing, so somebody would take in their paycheck to cash $800, $24 would be the fee plus the admin. That doesn't sound terrible, but if you are cashing all of your checks there, that's every 2 weeks. By the end of the year, you're going to be charged over $600 just to cash your checks. So you're basically working 1 week a year to have the privilege of having your checks cashed. So when people try to compare these to bank fees, there is no comparison. It's an apples and orange situation.
So are most people in a situation where they need to just keep going back? Is there an alternate for them to go to?
You know what? It depends on what their needs are. As Candice had said, there really is a situation where people are put into that situation where they don't think they have opportunities or other alternatives. There are, but they have to research them and have to understand what's out there, and that's one of the biggest gaps.
So Barb, the costs that Pat just mentioned, they're very high. They're extremely high. Are there laws or regulations about this? And is there something that should change?
So you're absolutely correct. What is being charged, if you look at it on an annual basis, is high. The check cashing services are regulated, but I would say at the very best lightly from a consumer perspective. So the one thing that I can say that I would hope would help some people is that the federal banks are required by the federal government to cash checks of up to $2,000 upon presentation by the non-client of some identification. And should be no charge at all to the client. So if anybody is taking federal government checks into a check casher and being charged, there is an alternative. The other thing is that I've done some more research, and there are some of the provinces that have also done something of this nature. BC, for example, limits the fee part of it to $2 instead of like 3 or more, and the percentage of the value to 1% rather than potentially 3%. So if you're in one of these provinces and receive provincial government assistance, then please do check to see if there's a way of getting your money without having to pay the higher fees.
So Barb, I just want to step back a moment. You talked about the fact that, people can actually go into any bank with a $2,000 government check and not be charged. I want you to just explain that again, just in case,
Sure.
Somebody missed what you were saying, because this is extremely important.
Absolutely. And I could say this because I actually used to work at a bank. So you would, and again, a lot of people are going online, so they don't necessarily know this. So it's a good question. So when you would go into with a bank, you would have your, let's say, federal government check. It would be nice if you had a tax refund, but it could be from any source of federal government checks. And you would go up to the teller or the customer service representative, and you would show them the check. If it's below $2,000, which sadly most of our checks are, then you would be asked for I think it's 2 forms of identification, just as you would normally do if you were opening a bank account. And after that, they would, check the signature and stuff like that. But then they would cash the check, and there would be no charge.
So, Candice, I want to go to you right now. There's less than a minute left before we go to break. Who is affected by this the most?
I would say low-income people are mostly affected. People from ethnic communities, new immigrants are usually the ones who rely on short-term lending that is not typically regulated, such as the big banks. And this is because often they don't have access to bank accounts, or they have this feeling that they will be denied credit, right? And they need to get their needs met.
So when we come back, we're going to discuss a little bit more about payday loans and high interest loans and see if there's a solution to help people get out of that continuous cycle. So please don't go away. We'll be right back. Welcome back to Empowered with Elizabeth Naumovski. We're discussing payday loans and whether they're helpful to their customers. So according to a 2016 Financial Consumer Agency of Canada study, payday loan use had more than doubled in 5 years. Fewer than half understood that payday loans were much more expensive, and 4 in 10 borrowers used a payday loan for basic needs like utility bills. A 2019 Hoyes-Michaelos bankruptcy study showed the average payday loan size is actually growing. 1% of loans were for $2,500 or more in 2011, and this is up to 20% in 2019. Also, nearly 4 in 10 Ontario insolvencies involve payday loans, almost 1 in 2 for people ages 18 to 29. So today I'm joined by Pat Dunwoody, a financial services consultant, Candies Kotchapaw, a founder and executive director of DYLOTT, and Barb Amsden, head of PQbd. All right, Barb, I am going to ask you now, can you give us an example of how payday and other interest loans, high interest loans, can turn from meeting to short-term need to a long-term nightmare?
That's a good question. And I should say that to make people feel more comfortable, that my husband and I, well before we met, we found out later that we had both inadvertently gotten into debt that we could not pay off right away. So this is an issue that a lot of people struggle with. Now, in terms of laws to protect people from these high interest loans, well, sorry, first to answer your question about, first of all, you need a check cashed, and then you're getting paid by check rather than electronically. Then you find that you're needing that money to pay for food, as Candice said. And then you find that you can't pay off, that you need to borrow a little bit extra to get you over the next pay period. And then you find that the interest on the payday loan is higher. And then you find that maximum 2-month loan that you haven't been able to pay off gets rolled over and rolled over, and then it becomes to a high interest loan. Now, I know it sounds kind of complicated, but what I'll tell you about is what are the laws and why aren't there laws protecting us? So first of all, the federal government, there's a law that says you cannot charge more than 60% a year, which is for most of us ridiculously high anyway. That's 2.5 times, major bank credit card rates. And there's an example that Pat's going to give that is really helpful to bring this home to us. I guess Pat can give that example a bit later. Also, federal law lets the provinces regulate payday loan rates. So if it's more than $1,500 and it's for more than the 2-month period, the provinces set something, and they were really worried that people were going to be pushed into the arms of loan sharks. So they had to kind of do something that they, I guess, felt would incent people, the check cashing companies that were the ones that then became payday loan companies, that they would be getting a return for they'd be able to get a return for the work that they're doing. But the amount, if you actually look at it, is ridiculously high. So the highest rate provinces, because every province has some pretty much something different, that highest rate provinces let payday lenders charge up to $17 per $100 for a 2-week loan. And when you first listen to that, you say 17, 100, sounds like 17%. Like, at least I did get some basic math. But in fact, if you have to roll it over for a full year, that $17 per 100 becomes $442 in interest that you're going to have to pay back on top of the $100. That's 442%. if
Wow.
you kind of were balancing, arms, when you're balancing oranges to oranges and comparing apples to apples.
So, Pat, what can be done? What can we do here?
Well, I mean, there's a lot of ideas, but I will speak to two specifically. And one of the issues is that banks, as you've heard, are regulated federally. The check cashing services and other like services and stores are provincially governed. And then often it's left up to the municipalities to manage the introduction of these stores into the neighborhoods. So now I think we need a coordinated effort at all three levels of government and include the community services, the support services that exist, to really be able to make sure that the services that the people need in those communities are there and not just the companies that are opportunistic. And I think the other major issue that you've heard everybody to date is communication. People don't know what the interest rates are. People
Pat,
don't know.
Hold that thought. We'll be right back after this message. Welcome back to Empowered. We're discussing 3 ways people get money when they have expenses to pay and whether they're helpful to consumers. Consumer debt of borrowers who declared insolvency has grown by 6.5% for women as compared to only 1% for men. And the share of women declaring insolvency continues to grow so that it's now almost equal to that of men. Now, we can't just ban check cashing and payday and high interest loans because people worry about pushing borrowers into the arms of loan sharks. Interest rate caps on payday and other high-interest installment loans have been discussed, but progress has been super slow. Today, I'm joined by Pat Dunwoody, a financial services consultant, Candies Kotchapaw, founder and executive director of DYLOTT, and Barb Amsden, head of PQbd. Pat, let's get back to you. My apologies. Please continue.
It was just briefly, just knowing that there's a communication gap from what people understand payday loans offer and what is being offered. So that has to be clarified because they don't know. And Barb highlighted, they don't know that they're not supposed to pay any fees for government issued checks.
That's a really good point. Now, Candies, you wanted to talk about CERB.
Yes, so I wanted to bring up the fact that everyday people don't plan to get into a cycle of debt. Often using a payday loan service is because of a situation that is out of their control, like the CERB repayment that people now have to contend with. People didn't know, again, the communication gap, people didn't know that CERB was a loan. The eligibility seems to have changed, and the CRA has now put people in an unprecedented debt situation that individuals can never get out of, and hence the reliance on payday loan services now because there's no other alternative for repayment of the CERB.
So, Barb, how can people avoid this problem?
It's really hard to avoid, but on the positive side, and I think this is a change that I'd like to think that you've been involved in, Ontario recently changed the Payday Loans Act so that people in financial hardship with payday loans in default cannot be charged more than 2.5% a month. That's like only 30% instead of 400%. That's great. Second thing, there are programs to help in crises. There was one woman who had to pay for her father's funeral, and she took out a $1,500 payday loan. And then her stepfather died, and she had another one to pay for. And now after about a year later, her total debt was up to $24,000. Nobody goes into debt because they want to have to pay for something as plain as that.
So
there are programs.
Sorry, Barb. Candies, final word. We've got less than a minute. What do people do if they find themselves in this downward spiral?
Yeah, it's a tough situation to be in, but I would say community-based organizations are stepping up to help alleviate some of these challenges. They've created programs including rent banks that can provide some subsidies where individuals don't have to pay back loans to lenders.
So 20 seconds left. Final words, Barb.
we do need to make a change here. This is a serious issue, and with rising inflation and so on, we've got to make this a priority.
So, Pat, Barb, Candies, you guys are an incredible trio. I hope that we helped enlighten a lot of people today. Thank you all for being here on Empowered today.
Thanks for having us.
Thank
Thank you.
Clearly, we've just scratched the surface when it comes to evening the odds for people who must borrow and can't use a bank, and there really is no simple solution. COVID, inflation, and the talk of a recession have made life more stressful, and it's easy to feel out of control and helpless. Now, here are some steps to take to help you eliminate your dependency on payday and high-interest loans to pay your bills. So before you sign the payday or other loan documents, be sure to find out all of the fees, charges, and interest, and the maximum you can be charged, the date the loan is due. Ask about fees if you can't pay back your loan on time, and read the fine print of all documents. Ask questions if you don't understand, and don't feel pressured to buy other things that you don't need or may not be able to use, such as some type of an insurance in order to get the loan. Also, there's an option many don't know about when declaring bankruptcy seems to be the only option available to you. Consumer proposals are a way that you can work with a professional to work through their financial problems. Bye for now.